Welcome to another session for the Global Professional Proprietary Trading courses. I am Dr. Glen Brown. In this lecture session, we'll be looking at our Global G7 Combo Forex trading strategy. And this is a trading strategy that we apply using the 7 major currency pairs and configure it within the Global Algorithmic Trading System. So it is an automated trading strategy where we determine the risk model in terms of the percentage that we risk per trade. We determine the stop loss and the other features including trailing stop. And we apply it within system number 1 to 6, which is technically strategy 2 to 7. Before I get into the major aspect of this lecture, though, I want to bring to your awareness the risk disclaimer. And I'm going to leave it on screen here for you to read through carefully. Bearing in mind that we could have viewers watching this lecture outside of our control portal. It's also important that we will be using a stimulated account to map a $20 million portfolio. And while we use live market feed data, there are certain limitations that you need to take into account. So I could start it off for you and then you go through it carefully. Trading, foreign exchange and margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Also, I want to take you a little bit into futures trading. And futures trading involves the potential of substantial risk of loss as well as substantial gain, and it is not suitable for all investors. The high leverage nature of futures trading means that small market movement will have a great impact on your trading account. And yes, this can work against you, leading to large losses, or can work for you, leading to large gains. If market move against you, yes, you may sustain a total loss greater than the amount you deposit into your account. You are responsible for all the risk and financial resources you use and for the chosen trading system. The Global Algorithmic Trading software that is embedded in this course is to aid your decision making. You are responsible for the configuration to suit your trading style. You are responsible for the end result. You should not engage in trading unless you fully understand the nature of the transactions that you are entered into and the extent of your exposure to loss. If you do not fully understand these risks, you must seek independent advice from your financial advisor. All trading strategies are used at your own risk. It is your responsibility to confirm and decide which trades to make. Trade only with risk capital. That is, trade with money that, if lost, will not adversely impact your lifestyle and your ability to meet your financial obligations. You should also note that these lectures are for education purposes only. Only education purposes. The US government required disclaimer. I want to leave that for you to read on screen here. And pay attention to the CFTC Rule 4.41 that is applicable in these lectures. So while we'll be using live data feed and to stimulate a $20 million account for the G7 strategy, you should consider all these to be hypothetical. And there are some limitations with hypothetical. So I will allow you to take a minute or so to go through the final section of the risk warning before we dive into the major part of the lecture. Okay, great. So the first thing I want to do here is to give a brief overview of the strategy. It's important to know that the risk model that we will be using is a little bit different from the normal risk model. But yes, you could also utilize this risk model in the individual standalone systems. Now there are a few features that I want to point out in this session before we head over to our trading platform. I want to talk a little bit about the risk module, the risk model. For the risk model one, for this size account, we are risking 0.01% of free equity. In this case, that is 0.01% of 20 million. Many will ask the question, why risk 0.01% on such a huge account, 20 million US dollars? But let me explain. This is not a get-rich-quick system or strategy. Also, note that we are pyramiding the 7 major pairs into 6 systems. So technically we are entering a trade 6 times. So system 1, 2, 3, 4, 5, 6 will be applied to each of the 7. That means at any point in time we could have 42 positions. That means the fact that we are using 6 systems and 7 pairs, our total position will be given by 6 times 7, which is 42. So we can have a total of 42 positions. In light of this, we could also say that our total real-time risk if all the trades are executed at once, which is not possible. I haven't seen any stimulated account forward test or back test where the 42 position was executed at once. Reason being, each time frame have its own structure. As we have explained before, we designed the Global Algorithmic Trading Software to obey the laws of multiple time frame. One of the features of that is that each time frame have its own structure. Also, with this strategy, we are using the full color band along with 3 time frame confirmation. So each feed into each other. However, we could also have a situation where a bucket of trade is executed one time and those trades move against us. So instead of one trade moving against us on a particular pair, we could have 4 trades moving against us on a particular pair. Hence, we would not want to have a 2% risk or 2% real-time risk. We want to have less than that. Because in truth and in fact, one trade cycle then consists of 42 trades, 42 positions. So the total real-time risk then, using the 42, multiply this by the 0.01% will give me 0.42%. And this is, in my opinion, is the best it gets in order to maintain drawdown level. Also, for a person who want to venture out into prop trading where the account owner or the firm will give you a 4% trailing drawdown. And we have tested this with the normal risk model, say 2% per trade. That is suicidal. You're going to hit the drawdown. And if you are trading the Global 28, where you select one strategy, maybe say strategy number 4 or strategy 5, along with the 28 major currency pairs, and you are risking 2% per trade, the total position that you could have at any one time is 28. And if we take 2 times 28, that is 56% risk, 56% real-time risk. It's just a matter of when, not if. When you hit that trailing drawdown. So one of the objectives of the G7 is to try to configure the systems, diversify within major currency pairs, diversify within time frames, but at the same time maintain the real-time risk below 2% of the portfolio. Also important to note that the fact that we are using a more tighter stop loss, so we are using the daily average true range, that's what I call DATR, with period 7. So we are taking the 7-period daily average true range as stop loss. Okay? So let me just do some backup here. Note 5 is that our global stop loss is equal to 1 DATR 7. That is period 7. And this is also equal to the global trailing stop. There are times we have what we call a parabolic move, where rapidly, especially during news announcement, market run away. So we're going to apply what we call a normal trailing stop equal to 350 points, which is the same as 335 pips. Yeah, the feature we put in it. Now with a 1 DATR as stop loss, it is prone to stop out, premature stop out. But based on the fact, especially since after the global financial crisis, the GFC, we haven't seen a massive trend move sustainably in one direction. So we don't want to get caught. So our preference is to use the 1 DATR. However, if we note if we have stop out, frequent stop out, we could use the alternative stop loss is 2 DATR 7 alternative. And if you use that as the alternative, then you might have to use 70 pips or 700 points as a trailing stop. The other configuration in terms of the color bands, we are using all 11 bands. We are taking 3 time frame confirmation from system 1 to 6, which is strategy 2 to 7. And we are also utilizing the normal 6 entry trigger. So I'm not going to go too much into that aspect in this lecture. What I want to do in this lecture then is to just take you briefly through the pairs, go over to the platform where I already set up the system and it has been running for a period of time, so we could look and see what is the outcome. But before that, I want to just bring something to your attention. I don't know what the full status of the account. The objective is not to hype any particular trade. The objective is not to show how wonderful this strategy is. It's for educational purposes, and the objective is to demonstrate how we could use the Global Algorithmic Trading Software as a tool to aid our decision making. So let me up over to a web browser where I already configure the literature for the strategy, so I don't need to type it out on screen here. You'll see that the Global G7 Combo Forex trading strategy was developed by me for my global multi-asset class professional proprietary trading firm. And this firm is different because we trade with our own capital, we take our own risks, we develop software and strategies. And all these training that we are doing is for internal purposes. But yes, later on, we could decide to retail it to the general public. So we reserve that right. Now the seventh strategy the 7 major pair, I should say, that we are using would be the Euro, USD, the US Japanese, GDP, USD, USD Swiss francs, Australia USD, USD CAD, and New Zealand. These are the 7 pairs. And what we would have done is to add them to the Global Algorithmic Trading Software System 1 to 6, risking the 0.01% per trade with a stop loss of 1 time the daily average true range. We give you a brief in terms of what the software is for persons who don't know exactly what it is. And in this is a system page, and we have some matrix that we're going to pull from a platform, MyFX book. So we're going to look at the drawdown. We're going to look at the gain and losses in later session. And then this graph that you are seeing here is the current status of it. This is the equity curve, the goal line, the equity curve. So you can see the equity curve is upward sloping here, but this has nothing to do with what the end result will be. And you'll also see later on, if we go over to it, a lot of different trades. You can see the summary, what is the status based on this date and the compound monthly, but that's not my objective here now at this stage. So it's just to give you a debrief and to look at what would have been the major areas. I want to discuss a little bit about the daily average true rate. The value of the daily average true rate indicates how much prices expect to move against an existing trend without a material trend change. And we are fully aware that the daily average true rate could generate whipsaw that lead to stop out. If this happened, we could increase the global traders stop loss to 2 times the daily average true range. The main purpose of using the daily average true range is to create a global traders stop loss line that follows the trend and give an exit signal as soon as we see a possible change of trend. I want to go over to my desktop and to the platform. I'm going to use my screen share here, and I'm heading over here. Just want to make sure we synchronize. And I'm using the blank template, so I'm not going to go into the color band configuration. If you look to your left, you'd have seen the 7 pairs that we are using, and when we set it up like this, we only put the pair that we are trading, so we reduce the resource utilization. And what we do is to add from system 1, so you'd have seen the €5, 5 minutes, GDP, 5 minutes, so we have 1, 2, 3, 4, 5, 6, 7. You'll have noticed some printout, but the configuration is in the software here, Global Algorithmic Trading Software. And you'll get this preset as well in the portal, where we are risking 0.01% of free equity. We are trading 24/7. I mean, whatever time the market is open, we're not going to put any time restriction. We are going for a 3-to-1 reward risk ratio. And you'd have seen the configure, or we configure the one ATR, DATR, period 7, time frame 1440, which is the amount of minutes in a day, and the ATR multiplies 1. We'll also go down to the trailing, and you'll have seen 3 time frame confirmation. We're not going to go through all the features. You will also see the normal trailing to be 350 points. We also have the ATR trailing configured same as the stop loss. We have seen the color band, the MMA, from 1 to 11, technically, all of them activated. And then the other indicators. We are using 772 for the global normal default stop loss. I'm not going to go through all the other settings. Okay. And hence, this what we do is to put this on each. Now, the other feature of this strategy is that all the systems use the same all the system use the same setting. So if we look at our system 2, we will have seen the same setting being used. Okay. I just want to go over a bit to make sure that we are still in the as we got a potential break in the recording. Let me just come back to here. So this could be forced to do a continuation of the recording. So let me get back over to my original desktop then. And you would have seen, let's just recap. So we put the software on the 7 pairs. Each system we add the 7th. You'll also note that the risk and the parameter setting for all the system is the same. So even up to system 6, we are using the same 1 DATR as stop. I don't want to show you what have transpired, say with system 2, because we could possibly view this, and the Euro USD. You notice that there was an execution here that seems to be stopped out. Then another one here, and this one was successful. As you could see, now we are at 1.0632 after a 40 pip decline today. But the fact that our trailing is 350 or 35 pips, we're able to trail this. So we enter here, the stop is here. So we are locking up this space. But you'll also notice that there are other lines. These are the other system being triggered. So as we go up, you could see the different. Look at the Euro, the GDP USD. Same situation here. Multiple trade triggered. The trailing stop is here. So we are locking up this amount of profit. Now, we could deactivate the normal trading and just use the ATR trailing. But I've noted that as the market expands, the ATR trailing stop would also expand. And hence, based on research and analysis of the various matrix, we would possibly be giving up too much to the market if the trend reverses. Hence, while 35 pips might be very close, a fraction of the actual stop loss, which could mean that we are putting the trailing stop into more market noise. Our preference is to capture a little bit. So we use the 35 as the trailing and hold the system. Let's look on the USD Japanese. Look at this one. We enter here and we pull back, rally. Now we are here. All the trades that have been executed here, our trailing stop would have been united or synchronized, as I would put it, because we have gone 108 pips so far in this trade. For the USD CAD Swiss francs, same thing happened. You look here, we enter, we get stop out in the Asian session, come back at the end of the, close to the end of the Asian session, we get back in and we rally off here. Cutting losses short here is important. So a 92 pip advance so far for the day, break above the resistance level 3, 35 pip trail, give me a stop below level 3. For the USD CAD, system 2, similar thing happened. Okay, so we rally, get stopped out. This wasn't our last trade, but we might pass a little bank a few pips. Enter back here, pull back, rally again, 35 pips is the trail. So we have a stop loss below resistance level 3 after blasting 73 pips for the London session. Australia USD, another 49 pips to the downside. You'd have noticed here that we expand to 89 for the stop, but we are using 35 for the trail. So we had a trailing right below support level 2 after breaking it. The final New Zealand USD again, system 2, same thing happened here. We rally down, trailing 35, stop loss expand to 75. I want to go to maybe a higher system so you could see how these individual trail work. You would have seen here we have a similar situation. System 4, not all the stop reach break-even point. And we go right out to the final system number 6. I don't think we need to prolong this lecture too much, because we'd have seen the capability of it. Now I think I get a break in transmission again. So we might have multiple parts for this lecture. Let me go and restart it. So we might have some repeat. Before we got the break in transmission, we were looking at the, say, system 5. Look at how the trailing stop work, and not all the system would have reached break-even point. Importantly though, what I want to do is to look at the current status of that account. You would have noticed that the 20,000 account, 20 million, sorry, account that was started, we have a closing. Let me go and look at what have transpired today. So today we have yet to close out any trade. So this could also indicate that our trailing stop is not inadequate, because we have no stop out. The total status in terms of closed trades thus far is 17,530. You see deposit 20 million. Again, the question is, why have 20 million and only executing a 2 standard lot? The objective of this is to aim for long-term gain, and at the same time, the possibility of losses is always real. So when that occurs, which it will occur, we should be able to maintain those losses so it does not damage the account balance. So the higher our position size, the more we will lose when we have stop out. And yes, we could have even up to 30 stop out at any one time. I want to just look at some of the account status. You'd have noticed that you could see the trades that have been triggered. 60 would have been the 1 hour, 5 minutes, 15 minutes. You'd have seen that so far we haven't seen any daily or much 240. That means system 5 and 6 have not yet been executed on this platform. So what we have executed on this platform is from system 1, 2, 3, 4. And this is what gives us a total of 28 trades, 4 times 7, 28 trades. So we still have system 4, system 5 and 6 to trigger. However, the floating profit is 35,000. This is not to promote any particular trade. It's just to demonstrate the strategy. While all these are now in profit, we could also have them in loss. We could have 35,000 in loss. We could have 350,000 profit if we were risking 0.1%. Yes. 0.1%, bam, 350,000. If we're risking 1%, bam, we'd have 3 million profit. If we're risking 2%, we'd have 6 million profit. 6 million profit and 20 million in less than 2 days. But guess what? Whatever worked for you now could work against you later. 0.01%, less than 0.5 risk exposure will lead to a low level of drawdown and also give you more consistency in order to trade for the long haul. This will lead us to the end of this. Another session that I consider to be pretty much important. We have demonstrated the how the system works. And now we'll leave that to you to configure the same and monitor the same.